Another financial relief bill, the leaking oil industry, and a local legend says goodbye. All that today on Your Wealth Health. Hello and welcome to another episode of Your Wealth Health. I'm Erik Brenner, president and founder of Hilltop Wealth Solutions. I'm glad you could join us today. So we continue to see acts from Congress in trying to put some recovery bills in place. The oil industry certainly has had its challenges over the last couple weeks, as well as we're going to say goodbye to a local legend. So we've got a full show today. If you're following us on Facebook, thank you for that. If you could hit the share button and share this important information, that would be great. As well as you can always follow us on yourwealthhealth.com, where you can watch previous shows. You can listen to us on podcast and stay up to date on all the information. So we have recently seen another act of the CARES Act, which is totaling almost $500 billion. We have a lot of the money going to small businesses. If you probably have heard that the PPP or Payroll Protection Program that was designed and developed to help those small businesses kind of get through this pandemic, the money ran out very quickly. And it's estimated that only about 5% of the small businesses actually got to the money. And so we're going to dive into that in a second. What Congress recently did with the new passing of some additional funding is they had set aside some money for the smaller businesses, as well as setting aside some money for hospitals and testing. So I have Matt Aurenz and Bill Davis with me today, and we are continuing to practice social distancing. I'm obviously in our studio, but Matt and Bill are coming to us from their homes. And so let me bring in Matt. And the recent infusion of money, if you will, from Congress, Matt, we feel, again, was needed and hopefully will help more small businesses kind of get them through this really challenging time.
Yeah, that's the hope, Erik. It's about 90% or so of businesses on the first pass of the stimulus that didn't actually get a hold or attain any money in that relief package. And so what felt like a pretty big pool of money for small businesses ran out really quick, and a lot of them were left just stranded. And so this second passage is there to help that. There's about 380 billion that will go to small businesses. About 320,000 320 billion will go to the small mom and pop shops. And those are ones that, had limited banking relationships. Those are ones that just didn't jump on the ball right away of getting their lending requests and that type of thing. But they're the ones that are still the heartbeat of America. And so we're hoping that them getting some additional funding will help in this troubling time. And then there's about another 75 billion for hospitals, which is desperately needed, and another 25 billion for coronavirus testing, which I think everybody at this point agrees is a pretty big thing that's needed. So we'll see how this plays out and whether Congress passes more on top of this, but that's a good beginning.
Yeah, I think it is a good beginning, and we do expect more relief to come. Just because, again, we don't know how long this pandemic's going to go. And states are starting to get back open, and of course that's a question mark as to how fast they open, and will this virus come back or not. And so there certainly is a lot of uncertainty at this time. And just to comment on the markets quickly, the markets have been a bit surprising and kind of hanging in there, Matt, and we haven't seen a lot of volatility here over the last couple weeks.
You're right. We've seen kind of a decrease in the VIX, which is a volatility index, which supports some stabilization. First quarter earnings are really coming out, and this week is a big test with those as well. What we're probably seeing a little bit more of is a lot of hope and momentum in the market with a lot of the government stimulus. But the raw data, as it begins to come out and trickle in, that'll be an interesting test to see where the market goes from here. Some of that's probably already priced in. And I think you also see, you got about 2.5 months or so of the first quarter that really didn't have a problem yet with the pandemic. And so even that data is probably not going to be a full-blown scale of what's going on economically right now. So second quarter numbers will definitely have that dialed in a little bit more, but we'll see what happens here. It's a good indication of where the second quarter is going to go. That's for sure. Our hope is that momentum and the stimulus continue to drive this market, but we'll see with data that continues to come out.
Yeah, and so switching to unemployment. So also there has been some changes over the last few weeks and in the unemployment benefits. And so, Bill, we're starting to see folks, first off, get their unemployment if they filed for it, and then some extension of those benefit dollars.
Yes, we are, and it's taking some time. Our concern is we have 6 million small businesses with 129 million people that mostly are closed up, and that's 47% of the workforce. So unemployment's going to play a really big part in helping people's families. So fortunately, we have a couple graphics, one of which is the federal pandemic unemployment compensation began in Indiana last week. And just to clarify, that's the $600 additional dollars. So as you think about being a small business person, even if you have payroll protection money, you can only forgive 25% as non-payroll. So furloughing employees that can get up to about $50,000 a year, which would be kind of the average median compensation in our region. So that's a big deal that started last week, and now starting this week, we have the pandemic unemployment assistance, which is the PUA, and that's for self-employed, independent contractors, gig economy employees that would not normally qualify for traditional unemployment. I did note, looking at Department of Workforce Development this morning, that you do have to be denied traditional unemployment insurance prior to applying for that. So I would encourage any small business owners, independent contractors that are unable to work during this time period to at least get in an unemployment claim in, so that then they can come back and try to get the pandemic unemployment. And we're still yet to hear about the pandemic emergency unemployment compensation, which that's the extension of an additional 13 weeks. As to, we know it's going to happen. It's just they're kind of trying to, there's so much stimulus money coming into the unemployment program that they're kind of taking it one step at a time. And fortunately, we got the first two big ones up and running that now we'll have the extension coming for anybody, even if they were on unemployment when all this began.
And we got to have some patience, Bill, don't we, as it relates to when people are filing. And I know that there's been some challenges there, but you also have to think about the system, and that the system has been well overloaded.
We're hearing a lot of complaints, but I will say a couple people that I talked to that finally got through were very, very complimentary of the people at the state and how helpful they were.
Yeah. Thanks, Bill. So we have many resources for you. You can go to our website and find all those resources. We have a weekly webinar that we're doing Fridays at 3 o'clock Eastern, where we give updated information on the markets and some strategies, as well as we offer a 30-minute free, no cost or obligation consultation just to find out where you're at, answer your questions, find out more about what you're doing. So when we return on Your Wealth Health, we're going to talk about the leaking oil industry, and it is leaking. We're also going to give a tribute to one of our greats in the area that has announced her retirement, and we're talking about Muffet. And we'll talk about re-looking at your goals. All that and more when we return.
Hey everyone, it's Ken here with K's Cleaning. I know the biggest thing going on right now is the COVID-19 virus. We are going to get through this, and the only way to get through this is together. This virus is everywhere. That's why companies like us at K's need to allow us to come in, get rid of that virus for you. We have switched over to plant-based chemicals, which is made right here in the US. Plant-based chemicals allow us to breathe in fresh, clean air and the products that we use. A lot of products out here has a lot of chemicals, which is harsh to the lungs and to the body. That way you, our customers, will have a safe, clean home and place of business. If you need more time in your day, try K's Way. To get in contact with us, call us right here. The number's on the screen. You have any questions, we're here to answer.
Welcome back to Your Wealth Health. Well, the oil industry is certainly leaking oil, and it's gotten a lot of press over the last couple of weeks. I'm sure you've experienced that all at the pumps. But right now we're not filling our tanks a whole lot because we're not going many places. But I want to talk more about that, and so I'm going to bring Matt in. Again, we're practicing social distancing, and Matt's coming from his home in Valparaiso, Indiana. So, Matt, we have certainly seen very interesting moves in the oil market over the last couple of weeks.
You're right. The first time we ever saw oil go negative in the United States, and that's a big deal. A lot of people were questioning what's going on there. Is there an opportunity for me to invest? And we're taking a look at that. And the big reality is there's just so much supply without very much demand. And that's Econ 101. And you got tankers and ships sitting in ports getting paid to store oil. You got Russia and OPEC and Saudis just pumping oil, trying to gain their market share and put up the small business oil company out of business to capture that market share. And those are state owned, so it's not like America where those are free trade capitalist companies that are harvesting the oil. It's actually owned by the governments, and so for them there's not as much risk when continuing to pump and saturate the market. But the storage issues is a big problem. Nobody's traveling. Cruise ships, airlines, a lot of those are grounded and at ports. So we're just seeing that the limited amount of oil consumption with the overabundance of pumping and running out of storage created this huge anomaly and a huge issue of nobody wants the oil and nobody wants to pay for it. And so, the May futures contracts went negative when they were trying to dump those. Nobody wanted to buy them. Nobody wanted to pay the prices for them. And so we ended up seeing those go negative. And essentially, people were paying other organizations to take the oil off their hands and store it somewhere. So odds are we'll probably see that happen again here come June. And most likely that it could happen again in July, just with this overabundance. And so if we can get people back out on the roads and airplanes back up in the skies, we'll probably see that normalize. But I do think that the abundance of supply at this point is going to that's going to take a little bit of time, wouldn't you think, Bill?
Yeah, I would totally agree. I would totally agree with you, Matt, that the global economy is it's very important. Oil is very important to the global economy. So it's not going away. We want to try to change the carbon footprint through introduction of other energy sources, of course, over the last 10 years. And the fact that I think we're probably going to be out of oil in 50 to 60 years from now. But once we get our travel industry back, travel and leisure, people start flying again, cruise ships are back moving, and we have cargo moving again. So, we're not moving, cargo, trains, planes, all those transportation modes continue to use hydrocarbons, lubricants, those kinds of things that come from oil. So it's definitely, I totally agree with you. It's a supply and demand issue. And we expect that the demand will come back, and it will probably come back pretty rapidly, because I think we're going to have we're going to need to fill the pipeline again, so to speak. This week, the big discussion is poultry, beef, and that whole pipeline's kind of drying up a little bit. And so I think we're going to have some demand issues that we're going to need to fill once we come come out of this this pandemic.
And I think one of the things too that's important for the viewers to understand, because we've had a lot of questions around how can it go negative, dollar wise. And Matt, you mentioned it. There's just nowhere to store it, so they were paying people to actually hold it. But our understanding of oil production is it's not an easy shut down the production. It's a pretty complex business, and they just can't turn a switch off and shut the production down and then refire it back up. And therefore, instead of doing that, it's better for them to pay to have someone store it. The other thing that I would, we've gotten questions around is this a time to buy? Buy low, sell high. Is this a time to buy something in oil? And I think our opinion is, yes, there are certain opportunities that you kind of have to cherry pick. There certainly are going to be companies that are going to file bankruptcy, and we're already starting to hear a couple of those. But you just got to be cautious, but there is opportunity, don't you think, Matt?
I think you're right. I think there's definitely opportunity. I think you really have to know what you're investing in, because futures market in particular is not something that without pretty good knowledge about that you want to get your feet wet into. And so if you have questions about opportunities on what to invest in, I would recommend that you seek a professional, ask them, really begin to understand what it is you're investing in and why you're investing it in that, and what the target range is before you just start throwing money at something because it looks like a good opportunity, or you had a friend or a buddy say, hey, this is a great opportunity. That doesn't necessarily mean it would align with your goals and risks. So seek a professional's help before you begin investing that.
Yeah, that's definitely true. And I think as it relates to the oil itself, and then back to the companies and what you're investing in, there's just that unknown. We just don't know exactly, is it going to be a U-shaped recovery? Is it going to be a V? We've heard of the Nike swoosh recovery. I mean, there's all these different scenarios out there, and we just don't know right now when the market economy will recover. And so it just, Bill, it just becomes a bit challenging to try to determine that.
Well, yeah, it's definitely going to, because we're going to open this thing up very slowly. We turned it off with a switch, and we're going to turn it on with a dimmer, and it's going to come up slowly. We're seeing an experiment in Georgia this week that, things are starting to slowly open up there, and we'll get some data from that test kitchen, so to speak. And it's going to be a long time before we get back to an economy that we remember a month ago.
Yeah, thanks, Bill. And we know right now, we know at Hilltop Wealth Solutions, in dealing and working with individuals and businesses each and every day, that's what we've all done, and Hilltop's done for more than 25 years, is that it's certainly a challenge. And the economic times are a challenge, and we know that many are out of work, or many have been furloughed, and many have been permanently laid off. But we will get through this. Our economy is strong. The world is strong. And, together we will get through this. There is the new normal that they talk about. So we see this already with capacity as it relates to restaurants and so forth as the states open up. But it's really important to look at past all this and say we will be stronger as we move forward. When we return on Your Wealth Health, we're going to relook at your goals. We're going to dive into that a little bit. And we're also going to pay tribute to that local hero that has announced her retirement. Welcome back to Your Wealth Health. Thanks for joining us. I'm Erik Brenner, and we're going to dive into talking about reassessing your goals. So we're getting a lot of questions around goals, risk, and tax questions, and so we want to just dive into those a bit. One of the questions we've gotten more often than not is, what should I do with my paycheck that I've gotten from the government or will get? You know, I'm in a pretty good situation. What should I do? So we thought we would talk more specifically about cash flow, financial goals, risk assessment, and so forth. So Matt, we really want to make sure people first off have a foundation financially with cash reserves, and making sure that they're going to have enough to get them through this current time.
I would agree, Erik. I think the most important thing at this point, if you're getting your stimulus check and it's maybe not something that's needed right now because you're still employed or you still have income sources coming in, would be to make sure that your cash reserve is appropriately funded. So we're talking a minimum of 3 to 6 months of liquid cash available for expenses. So if you had all other sources of income stop, you would still be able to pay your expenses for at least 3 to 6 months without depending on other sources. So that would be step one. I think that we would all agree on is imperative that you would fund.
Yeah, and so, you know, we have some parameters, Bill, around cash reserves, how much people should keep in cash reserves and so forth, but it does really break down to the individual situation.
Yeah, you're exactly right, Erik. It's, we've been doing this 23 to 25, 30 years, and, we're always building in these protections, right, that we don't think they're ever going to come to play. We have insurances for disability and life insurance and cash reserves, and now it's really coming to fruition in a real life pandemic that the kind of planning that we do in a financial plan really is coming into play, and that the cash reserve is a big one. The protection planning, God forbid, if somebody loses their job and they lose their group benefits, we need to be looking at that. We need to be looking at their tax planning because they're going to possibly be in a different tax bracket this year. We know that it could potentially affect their retirement plan due to the issues with maybe having to borrow money from their 401k or take an emergency relief from their individual retirement account. So now's the time to kind of reestablish the goals and reassess how we're doing toward those goals, and do we need to make any changes in those areas?
So I think another area we certainly want folks to think about is the risk that they're taking, what they're currently taking. And Matt, sometimes it's really easy when things are going along real good in the market and say, yeah, I'm a moderate investor. Yeah, that sounds good to me. But when it comes to challenging times, that really does challenge the risk tolerance. So just a recheck to make sure you're in the right risk tolerance.
Correct. I think checking to make sure you're in the right risk tolerance, and do you actually need the risk that you're taking to achieve the goals that you've set forth? It's really easy too, I think, for a lot of people. They set their initial risk target, maybe 5-10 years ago. Things are going well in the market just like they were. And what was a moderate risk without proper rebalancing and looking at their portfolio over the last 5 to 10 years is they naturally drifted to a more aggressive risk tolerance just because there are certain asset classes in their portfolio grew at a more rapid rate. And so then when you see a market that pulls back, they're overexposed to risk that they didn't realize they had because they initially thought, well, I thought I was a moderate investor or a moderate conservative investor. But because of complacency over the last 5 to 10 years and good market growth in those asset classes, they're all of a sudden a moderate aggressive investor without knowing it. It's just something they didn't realize had occurred. And so now they have overexposure, market pulls back, they lose more money than they otherwise would have. So those are things that's what we're here to help with, keep you on track there to watch your backside with that and your blind spots so that you might not even know you have. And Bill, I know this is something that you like to talk with a lot of clients about because they just can get complacent over time. How do you maybe you have some additional points there that you think about?
Well, I know we have a graphic called buckets of control, and there's things that you have no control over, and that is your business closing, the markets, the pandemic. You have some influence over how you spend your government stimulus, the decisions that you make with your family, and how you act and stay inside and stay away from others. And then you have what you have total control over, and that's keeping yourself healthy, your investment choices that you bring up, Matt, your spending. And I think a lot of people have learned some things over this period of time that they're spending less, which is good. And all of a sudden they're learning that they don't need the same amount of income that they thought they needed when they, didn't have any income disruption.
Another thing I think about besides those good points is it is a challenge, because if you go more conservative and you go ultra conservative, so let's say cash or some sort of cash CD, something along those lines, it's just not paying a lot. So tying in your need versus the return you're getting, Matt, you mentioned that, that just becomes a challenge. You have to talk through that and kind of look at what that really means overall risk-wise.
You're right. You really only have four options, Eric, when it comes down to it. You work longer, you save more, you have a more aggressive risk tolerance, or you spend less. Those are the four options that you really have. And so you have to figure out how all of those work together to work best in your comfort level and your financial situation. And those are just the things that you got to write them down. You got to roadmap that out. And if you don't, you're just kind of left in the dark and hoping for the best. And that's not a place that you want to be. And I think this current pandemic is really exposing that to a lot of people. I really need to get a handle on my financial situation. And now's never been a better time to do that.
Thanks, Matt. I want to take a moment and honor and salute one of our most beloved local heroes. And of course, I'm talking about Muffet McGraw. Muffet coached for 33 years at Notre Dame. She led her teams to 9 Final Four appearances and 7 championship games, and had 2 national championships. Muffet was inducted into the Naismith Basketball Hall of Fame in 2017 and became only the 13th female coach to achieve this honor. Muffet surely showed us how to stay focused, look at what's ahead, and really keep a positive attitude. So from all of us here at Hilltop Wealth Solutions, I want to say thank you, Muffet, for a great, great tenure within the community. Well, we're out of time. For Matt and Bill, I say goodbye, and we'll see you next time right here on Your Wealth Health.